IndusInd Bank opens higher but fails to grow despite loan growth coming in at a 12-quarter high. Brokerages across the board remain positive on the stock.
Avenue Supermarts post strong business updates for the third quarter. Both the stocks, though, that's Vedanta as well as Avenue Supermarts, they're under some pressure, trading with losses of around 2 to around 2.5%.
Some other business updates coming in. Punjab and Sindh Bank higher after it reports strong loan growth in the third quarter. Angel One's cross-client acquisitions rise also gains market share in the F&O and commodity segments.
RailTel surges after winning a 5-year order worth around 186 crore rupees.
And it's a steady listing for integrated cash logistics player Radiant Cash Management. Stocks lists at a 9% premium to its issue price, despite the IPO itself not being fully subscribed. It's off its listing highs.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangla Malu. Well, from the high point of the day, we've seen a bit of a downtick. We're down close to around 100 points from the day's high. But the flip side is we have recovered close to around 40 points from the day's low. So that 18,113 odd level, that's got defended. However, yesterday we went to 18,250 multiple times and we saw resistance out there. Today as well, we went near that level and saw a bit of a pullback. So it appears, at least as of now, risk reward is favoring a buy closer to around 18,100, while at around 18,250, it appears the bears are defending that mark. But let's get in Vishal Malkan. He joins us to give us his take on the index. Hi Vishal, good morning. First time we're speaking this year, so wishing you, your team, your entire family a happy new year. That's in 2023. What's your take on the index? Fill us in with your strategy.
Yeah, thank you so much and happy new year to you and your team as well. I would like to look at Nifty as having a consolidation range between 18,250 and 18,000 for a few days. And I think after the stupendous rally we saw in the last few months, there is some kind of consolidation phase which is required and it is showing. And Bank Nifty also has a strong resistance around 43,700, 600, which is difficult to cross. And I think it will retrace back to 42,700, 800. So there is some kind of resistance which we are facing in the market. The stocks which I would like to focus on today or the next few days would be different sector than banking, which would be cement and pharma. And in that first one, I would like to go with Sun Pharma, which is having a strong kind of a footing about 1,000 rupees. And the target for that would be around 1,075 with a stop loss of 1,000 rupees.
All right. Vishal, the broader markets, they're not doing too well today. So, and usually that happens when the street worries that maybe the Nifty may break the lower end of the band, which is seeing some sort of support. Do you think a possibility like that is on the cards? And secondly, you said you like cement stocks. Shree Cement is one of them, which is now moved to the high point of trade. Most of the gains coming by in just the last 10 odd minutes or so. One of the bigger movers in the last 10 minutes, among the top gainers on the Nifty as well right now. You have a view on that one?
Yes, I think cement stocks are doing good today and might do good in the next few days also, and especially Shree Cement, which is showing good strength above that level of 23,500. I think there can be another rally up to 25,000, 25,200 for Shree Cement for the short term. So definitely. And as you said, the broader market looks slightly sluggish, which shows that Nifty might break the lower band and touch a level of around 17,700 or 800, which would be a good retest of the bottoms.
All right, Vishal, thank you so much for joining in. Once again, wish you and your team a very happy new year. With that, we shift focus to a special segment where we get you a few ideas of profit coming in from our colleagues at Money Control Pro. Nandish Shah joins in.
Hi, today's ideas for profit is Kirloskar Ferro Industries. KFI stands number 1 in terms of market share for pig iron and number 2 for castings. There are multiple triggers for the stock to report earnings growth in the short to medium term. The second phase of Coke Oven plant and power plant is likely to be completed by March 23 quarter, which will lead to additional savings of nearly 80 to 100 crores. It is also investing in pulverized coal injection, which is likely to get completed by June 23 quarter, leading to additional pig iron capacity and reduced consumption of coke. The company has won 2 iron ore mines through the auction route. Though the mining has been delayed, we expect approvals regarding the same in the short term. Both mines put together will suffice nearly 35 to 40% of the requirement. KFI is also planning incremental expansion in volumes. Pig iron capacity is likely to increase from 5.5 lakh tons to nearly 8 lakh tons in the medium term, while castings capacity will increase from 1.5 lakh tons to 2 lakh tons. The company has proposed a merger with ISMT. The merger with ISMT is done at an opportune time, given that KFIL was able to turn around the operations much ahead of expectations. With various cost-saving initiatives and capacity expansion in the offing, we remain positive on the stock.
All right, thanks a lot, Nandish, for that. With that, we'll simply do a short break. On the other side, cash logistics player Radiant Cash Management listed on the bourses today. We will get chatting with the management. David Devasahayam joins in. Even as the markets are declining, we do have a bunch of stocks which are doing well. Adani and from the Nifty pack has moved to the high point of trade, and Axis Bank too has picked up some steam, currently at the high point of trade for that counter too. So we'll wait and watch whether this zone of 18,100 to 18,150 sees a bit of support for the index or not. But let's talk about the new listing on the block. It was a steady listing for integrated cash logistics player Radiant Cash Management. Remember, the issue size was reduced on account of the undersubscription of the issue, and as was the price. The price band was 94 to 99, and after issuing shares to the anchor investors at 99, for those who subscribed in the IPO, got it at 94. So from a 94 rupee price band, it is a 9.5 rupee premium that the stock is trading at right now. But if you compare it to what the anchor investors have been allotted at, it's just about 3 to 4 odd rupees. We do have with us the management of the company, Mr. David Devasahayam, joins in. Thanks a lot for joining in, sir. Just wanted to understand, why is it that the issue was undersubscribed, and at the same time, the OFS size was reduced from around 328 crores to around 202 odd crores. Are the people who, did reduce the size from an OFS looking to sell now? Is there a lock-in there? Mr. Devasahayam, can you hear us? All right, we'll just try to,
Good morning. Can you all hear me?
Yes, sir.
We can hear you.
You look at the screen. Well,
yes,
Jai
yes.
Hind, India.
Yes, hi.
Colonel David Devasahayam, and it's a wonderful moment for me this morning that after 25 years of service in the infantry, coming out, and in the last 17.5 years, we've been able to take our company public, Radiant Cash Management Services. And as you can see, I'm wearing my miniature medals because 21% of our 9,000 strong workforce is from the ex-services fraternity. So it's a proud moment for all of us, and we carry out, and that's the DNA of our organization, of integrity, discipline, dedication and frugality.
Congratulations
so it's
on...
nice to be on your channel.
Absolutely. Colonel David, it's an honor to host you as well, and congratulations to you and your entire team as well, and it's a phenomenal listing. But, in stock market context, we need to understand a couple of numbers and the way ahead from here on. Now, your OFS was scaled back. So there was a promoter entity and an investor that was looking to sell some part of their shares, which was scaled back because of the response. The question is now, do they intend to still come along and sell those shares as a promoter entity as well as the investor? Or for the time being, will they hold on? Go ahead.
Yes, we had a very strong anchor response. Anchor response was 1.4 times, and the best of marquee names are our anchor investors. However, in terms of the IPO, maybe operationally our planning could have been better. But we are over that, and there's going to be no sale. We reduced the OFS to manage the requirement, but there's going to be no sale at this point from either the investor or from the promoter group.
Yes, Mr. Devasahayam, on that itself...
We are really happy to see that the company has been recognized with a very strong listing this morning.
No, we understand that, David, it is a strong listing on the lower end of the issue price because it was undersubscribed. At the higher end of the issue price, it's about 2 to 3% premium. Just wanted to understand, you said that there would not be any further selling from the promoter entity or the investor, which is Ascent Capital Advisors. They've scaled back their size in the OFS.
That's right.
For how long will they not sell?
Well, they have clearly indicated that at least not for the next 6 months.
Oh. And what about you, sir?
I have sold my last share as far as the issue is concerned. And as a promoter group, we are going to be holding about 57%. And there's going to be no further sale of any shares from our side.
Okay, promoter entity will hold on to all the shares that they have. Got that. All right, let's talk about business then. Could you tell us what kind of a revenue growth can you guide for now that you're at the liberty since the stock is already listed? So what's the revenue growth trajectory you're looking at? And also if you could give us a sense about touch points. I think you're at around 55,000 touch points and you've been adding touch points at quite a good pace. What is the trajectory out there? Say by FY24, how many touch points can you add?
Well, I'll just give you a background. I think many of the viewers are not aware of retail cash management. Retail cash management is once the body public gets the money from the ATMs and teller counters and then it moves out. Thereafter,
Colonel David,
they sell it at various outlets.
Colonel David, we have had you on the channel and you explained it nicely the last time around as well. And, prior to the IPO, people are not so well aware. But I think now the entire fraternity has made an effort and they understand the business quite well. So now we're looking for a couple of numbers from you, Colonel. Tell us, what is the revenue growth you're looking at?
Yes, that's right.
And if you could give us the touch points, 2 factors I'm asking you for. Please go ahead.
Well, yes. The revenue growth that we are looking at is about 22 to 24% every year hereafter. That's what we are targeting. And as far as the touch points are concerned, from the DRS we were at 42,000 points. Today we are at 55,000 points. So we are looking at about 1,100, 1,200 touch points being increased month on month.
Okay. So
that's going to be the rate at which we are going to grow. The industry today, whole industry together is doing about 1.4 lakh outlets. But we have a total of, as per Frost & Sullivan report, 30 lakh outlets which are available. So it's a humongous opportunity. And now that we are listed and as a listed entity with all the requisite financial strength that we have and the strong financial fundamentals, we're a dividend-paying company.
We get that point. Okay, we take that point, Colonel David. We take that point. But the 2 things that stand out, revenues, you say, will grow between 20 to 22% going forward, 22 to 24%. And you will increase your touch points at the pace of 1,000 to 1,100. Just wanted to understand your revenue breakup. 67% currently comes from fixed point cash pickup, 24% from network currency management. Which one is more margin accretive for you? And how is this revenue mix likely to be?
That's a good question. Currently, 67%, as you said, is from the cash pickup and 24% from network cash management. Network cash management is growing very rapidly as far as we are concerned, and that's also the more lucrative segment in both of them. And so, therefore, I think the mix is likely to come down to closer to 60% of pickups and growing to closer to 30% of network cash management in the near future.
Okay, what is the margin differential between the two, network cash management and fixed point? You said it is more lucrative. Can you give us some numbers?
Well, in terms of numbers, what we can say is that the pickup cost which is there, that is as it is there in network cash management as well. But in addition to that, the banks pay us a cost because we deposit the cash into our own accounts. So there are certain cash deposit charges which they additionally pay. Just to understand what is network cash management, let's say a multinational bank has got, say, 12 or 15 banks, but they've got a large e-com customer as one of their end customers. Now, when we pick up from that e-com customer, initially, we can deposit into wherever their branches are located, but we deposit it into our own accounts, which are collection accounts.
Okay.
Right.
And thereafter, the next day, the whole amount is swept together and paid back to the client. So for depositing into our own account, we get an additional cash deposit charge. So that is why this is the more profitable segment.
Okay, all right. We've got that. But in terms of a margin trajectory, you have told us which part of the business is a lucrative business and how the mix will change. What is the margin guidance you could give us from here on, if you could give us that number? And second factor, you briefly said that you all have been paying out dividends as well. So what is the dividend payout you all are looking at maintaining? Now that you're a listed company, your shareholders will be looking forward to some gifts, and in the form of dividends, that is. Give us that target.
Well, in the last 3 years, we paid, these are COVID-impacted years, but to our shareholders, we have paid about 57 crores as dividends. So this is a track record that we have. And even as we speak, we have substantial cash on our books. So we are looking forward to maintaining this track record and provide our shareholders with a healthy dividend policy.
Should it be around 30 to 40% of what you earn? But would that be a fair estimate? And also give us the margin number. We just want these two before we let you go.
Yes, we are definitely looking at 30 to 40%.
Dividend payout.
We are looking at that number.
And margins?
And our PAT margin is in the range of about 18%.
All right.
EBITDA margin, sir, if you could tell us?
EBITDA margin, I go by the first quarter. You all know that first quarter is normally the weak quarter. EBITDA margins is about 26%.
Yes.
And PAT margins is 18%. And we hope to maintain and build on this in the time ahead.
Got it.
All right. Thanks a lot, Colonel
I
David.
have one last message I'd like to say. I'd like to say, there's
Go
a
ahead,
last
sir.
message.
Please go ahead, sir.
My life is an indication. My life is an indication. For 25 years, I was in the armed forces. I came out and starting with my savings and some support, in 17 and a half years, we could take the company public. This is for the youngsters of a beautiful country. This is a lesson. The markets are uncertain and all that is there, but this story, I would like you all to understand that in our country, impossible is nothing.
Absolutely.
That's what I like to say.
All right, Colonel B, thank you for joining in and giving us that message. Congratulations on a good listing and wishing you all the best. And as you said, some things are beyond stock market. You've given us those numbers, though, and you've given us some inspiration as well.
We
for the
also
youth out
thank
there.
him and all his employees, 21% of his employees, for their service to the nation.
Yes.
You have served our country well, and you continue to do so by hiring people who are ex-army as well. Thanks a lot for joining in, Colonel David Devasahayam. With that, we'll step into a short break, come back, get you more on the markets and individual stocks.
Welcome back. Well, we had some news flashing on Tata Power that was up for you on the screen, and Vivek is joining in. This stock is in focus after the CERC committee ruled on the share of mining profits from Mundra PPA. Vivek joins us to decode that. Vivek?
Well, that's right. So what we are understanding is at this point of time, the CERC has actually come out with an order and a verdict on how exactly will the profit sharing on the coal mining profits that Tata Power generates. Now, this particular order is for the interim period where the CERC had earlier allowed Tata Power for a complete cost pass-through. So now what they have said is, earlier the understanding that Tata Power had was actually that they would have to share the 100% of the profitability that they had. But now this particular profitability will be at 30%. Brokerages in fact say, DAM Capital has come out with a note. They believe that this would actually a positive development as far as Tata Power is concerned, as this now removes the uncertainty. And this is for the interim period from May to December of 2022. So it removes the uncertainty as far as the sharing of the coal mining profits is concerned. And they believe that at this point of time, Tata Power will actually be able to write back some of the profits. We are still awaiting, we've written to the management, we are in touch with the management, we are awaiting a response from them, and once they give it, we'll get some more certainty on how exactly Tata Power is looking at this particular verdict. But prima facie, it's an important development as far as Tata Power is concerned. Keep in mind that this, this does not relate or this does not pertain to the long-term PPA agreement where Tata Power is still in discussion with various state governments for increasing the coal power, the price of the PPA.
All right, Vivek, thanks a lot for that. So we will watch out for Tata Power there. But let's shift focus to the Shrey Twins resolution under the IBC. Sources tell us that the NARCL has emerged as the highest bidder. Ritu joins in to tell us more. Ritu.
Well, thanks for that. That's right. The National Asset Reconstruction Company, or the NARCL, has emerged as the highest bidder for the Shrey Twins under the e-auction process, which concluded very late last night. And we've been given to understand that NARCL's offer stands at 5,555 crores. That is in net present value terms. The second highest offer has come in from the NBFC, Autumn Investment and Infrastructure, very close to NARCL's offer at 5,526 crore rupees. And the lowest of the three has come in from the consortium of Varde and Arena, which dropped out after the second round of the e-auction with its final offer at 4,682 crore rupees. However, there are various components of this offer which will have to be studied by the lenders. For instance, cash component, which is the most important, is the lowest in NARCL's bid at 3,180 crore rupees compared to Autumn's offer, which is 3,240 crores. And the highest cash component has actually come in from the Varde Arena consortium at 3,250 crore rupees. So all of this will be studied by the lenders when they finally decide to put the bids to vote. And remember, it is not just the highest offer, but all three offers will have to be voted upon by the Committee of Creditors under the IBC rules. And now there are claims of over 32,750 crores that the Shrey Twins are facing. So even with the highest offer that has come in, lenders are staring at a haircut of more than 80%.
All right, Ritu, thanks a lot for that. So we will monitor that situation. With that, we wrap up on this edition of Chartbusters. You stay tuned to CNBC-TV18.